Hello and welcome to Market Domination. I'm Josh Lipton, live from our New York headquarters. There's about 30 minutes to go now until the closing bell. Today, energy stocks in focus after President Trump pledging to revive Venezuela's energy sector following the capture of the country's leader, Nicolas Maduro, over the weekend. Our very own Jake Connolly has his eye on some of the biggest movers today. Jake, what are you watching?
Yeah, Josh, I think the place to start is Chevron, right? Only U.S. oil company left operating in Venezuela right now. They're up about 5%. Exxon, ConocoPhillips, other U.S. majors, up a slightly smaller 2.5%, 3%. But where you're seeing the real gains today are going to be in those oilfield services companies. Halliburton, Baker Hughes, SLB. SLB up 10%, Halliburton up 9%. Really strong performance there. Final place you're going to see good numbers is the refineries, U.S. refineries. This is heavy sour grade crude in Venezuela. It's complex to refine, but those refineries along the Louisiana Gulf Coast are primed for it. So this could be a really good source of input. You're seeing Valero up 10%, Marathon Petroleum 6.4%, Phillips 66, 7.3%. So really strong performance, especially through those oil field services and through those refiners.
All right, Jake, thank you. Appreciate it. Well, oil markets are reacting to the latest headlines out of Washington on Venezuela. President Trump talking up leverage and the potential to unlock supply after his ouster of President Nicolas Maduro over the weekend. For more, we're bringing in now Matt Axe, senior strategist at Evercore ISI. Matt, it's good to see you. So in thinking about Venezuela, Matt, you put it like this. You say significant geopolitical event, but not a near-term market mover. Start there, Matt. Maybe just walk us through that. Explain how you're talking about this event with your clients.
Yeah, thanks for having me. Yeah, well, so I think, obviously huge developments over the weekend in Venezuela. But I think, look, energy markets are going to have to digest this. I think, the estimates are now Venezuela is around 1% of global output in terms of oil. Maybe over the next year, if things go right, it could get to 2%. But if you really want to start to see big numbers, you're talking, many years and many billions of capital expenditure that are going to be needed to really rebuild the country's infrastructure. It's been so degraded over so many years. So I think markets are digesting this. You see kind of the big jump in the oil names specifically, but crude, oil writ large, 1%, 1 to 2% on the day, a noticeable move, but not huge in the context of other moves we've seen.
For Venezuela, and you're hinting at this, Matt, I want to dig a bit deeper into it. For Venezuela, Matt, to become a meaningful, significant global supplier, what needs to happen, Matt? I mean, what kind of rebuilding are we talking about here for their oil industry and infrastructure?
Yeah, look, I think the country under the former dictator Nicolas Maduro was wrecked. I mean, just look at a chart of per capita GDP in Venezuela. Over the last 10 years, it's really just it's a tragedy, and so the whole country really needs to be rebuilt top to bottom. That includes both the directly oil-related infrastructure, but I think also, the human capital, the people of Venezuela. I think the roads, the bridges, the kind of basic infrastructure, and then on top of that, you're going to need political stability in the country. I think there are a lot of questions about going forward, what the political future of Venezuela is, and so I think you're going to need to see kind of all those things start to come together before you see the type of investment that's needed to really unlock the oil reserves.
Matt, have you seen any even kind of rough numbers yet about what it would take here to really rebuild the oil infrastructure and industry over there? I mean, is it $100 billion, Matt? Is it $500 billion? And any kind of rough timeline, Matt? Is it 1, 3, 5, 10 years?
Yeah, look, I mean, I think, the numbers are kind of all over the map right now. I think people, don't really know. I think it depends to some extent, how quickly companies can get in to kind of do a broader assessment. I think, again, it comes back a lot to kind of the Venezuelan people, and are you hiring workers locally? Are you able to bring people in? So those are huge kind of questions. I've seen estimates, that are in the tens of billions, over a 5 to 10 year time horizon, which I think relative to some of what you cited, and I've seen those other higher numbers as well, maybe a little optimistic, but they're sort of kind of, I think, your best case scenario, certainly.
Do you see U.S. oil majors moving into Venezuela, Matt, aggressively?
Look, I think they're going to explore it now. This is an administration that, I think whenever it does something, it does so with the opportunities for U.S. companies in mind. We know that the administration is engaging these companies and having early conversations, so I expect them to take a very close look at it. But A, it comes back to some of what I was saying earlier about the kind of political stability in the country. And B, the oil markets are pretty well supplied right now. You had the chart up earlier with crude hovering right around $60 a barrel. I think some, I suspect, would want the price actually slightly higher maybe. So, I think it'll be a bit of a mixed story, but I think they will be involved. They will study the situation.
Matt, how should we think about President Trump's statement that the U.S. would be running Venezuela? You heard that. What did you make of it? How deeply do you think the U.S. gets involved here?
Yeah, look, when he said it, it totally turned a lot of heads. A lot of people's ears perked up because I think it brought back memories of Iraq, where we toppled a dictator. There was questions of oil, and we tried to run the country, and it turned into a quagmire for the United States with a lot of money and loss of American life. So I think when he said that, a lot of people, like I said, their ears perked up. But I don't think Trump is thinking about an Iraq-like situation here. I think that was sort of a typical Trumpian kind of colorful metaphor to indicate that he expects the remnants of the Maduro regime to cooperate with him.
In terms of that regime, Matt, who takes over now from Maduro? Who's in charge? Who leads the transition? If you're an investor, how worried should you be about that transition, about a power vacuum?
Yeah, absolutely. I think those are the right concerns to ask. It does seem like in the last 48 hours, the situation has sort of tentatively coalesced where the vice president, Rodriguez, is going to step in and sort of be the acting president and has indicated that she's open to a dialogue with the United States, although the signals have been, somewhat mixed. I think with Trump, we've learned from last year, he likes to feel out the situation instinctually. He likes to see, is he getting along with the person? Are they cooperating with him? If they are, he'll run with it for a bit. If not, he may kind of pivot and want to do something different. So I think that's a big part of the political kind of uncertainty. The other point I would mention is that there is a legitimate democratically elected government of Venezuela. Multiple sort of foreign countries and external audits showed that the opposition party won the presidential election in 2024. And so I do think as time goes on, Trump may want to work with the vice president, Rodriguez. We may be forming a decent working relationship with her in the interim. But I think as time goes on, the Venezuelan people and the global community are going to expect a transition to the democratically elected government.
I'll get you out here on this, Matt. As we look ahead now, what are you watching for, Matt? What are just the key signs and signposts on your radar?
Well, look, I think first and foremost, we sort of have a tentative stability now. I think how long can that last? I'm really watching the Venezuelan military and security services because that's the real power base in the country. If they're going along with this idea of Vice President Rodriguez or now President Rodriguez kind of playing ball with the United States, then maybe we can kind of continue on this path that we're on now for a number of additional weeks and months. But if you start to see fracturing, if you start to see the military, the security services want to go in a different direction, I think that's when you get into a bit of a dangerous situation where you're looking at some chaos. Even potential civil war type of risks. So still a lot of different directions this thing could go.
Matt, great to have you on the show today. Appreciate your insight and analysis.
Thank you so much. Take care.
Well, the threat of ongoing geopolitical uncertainty in Venezuela, not a concern for investors. Stocks rallying in the first full week of 2026 and the Dow hitting a fresh record high. Joining now, we got Matt Miskin, Manulife, John Hancock Investments, Co-Chief Investment Strategist. Matt, great to see you. Let's start about these events in Venezuela, Matt. Listen, we know investors, of course, tend to look through geopolitical events, Matt, but I'm just curious as a strategist, how are you thinking about the events, the headlines? Are you surprised at all, Matt, by all the green on the screen today?
Not really. And Josh, it's a good point. It's just another geopolitical uncertainty event. And really, that is something that is not diminishing much. And you keep on looking at gold and silver and precious metals, and they continue to rally. And really, that has been the place that is magnified or been the place where markets have focused on amidst this geopolitical uncertainty. But as it relates to markets, we are in a momentum-driven world. And it's a invest or trade first and ask questions later type environment, where the price action leads the narrative, meaning the price will move and then a story will come on after the fact. And so we're really seeing across the board some interesting moves today. We've got regional banks and small caps rallying. We've got copper rallying. We've got silver up big again. We've got the Kospi up. So it's not just an oil story. There's a lot of momentum trading happening all over the world.
All right, a lot of momentum, Matt, but big picture, your advice to your clients here in 2026, you say prioritize disciplined risk management. How do you define that, Matt?
Yeah, it's starting with income and producing income for clients and investors and thinking about how to do so in a risk managed way. So it's a higher quality type tilt. We're still getting attractive income out of the bond market. We're able to lock in these yields as the short end and short term interest rates fall. Money markets have seen massive inflows. There's $7 trillion sitting in money markets. And what we're just advocating for is locking in that capital into higher quality bonds that could provide income for years. On the equity side, it's hard to get much more out of the valuations. We're already stretched. We were stretched coming into this year and earnings just powered through. We want companies that grow earnings all over the world. We're looking for high quality companies with good earnings momentum. We like that more than just the price momentum. So it's a higher quality tilt around portfolios, starting with the fixed income side and then even thinking about it in your equity part of the market too.
You mentioned earnings growth, Matt. What are your forecasts for profit growth this year? What are you expecting?
More like, I'd say, kind of high single digits, so 5 to 10%. Right now, the street is looking for nearly 15%. That's the consensus. That looks optimistic to us because you're CAGRing on top of a huge base. This year is going to be a high bar to go against into 2026, just because earnings growth was so robust. And analysts were really offsides on it all year long. After April, really, earnings just turned up and they just kept rising. Next year, we think we can do high single digits. We think that's what you get in return out of equities from here. But it's going to be with a lot of volatility because there's a lot of markets, pockets of them, that are getting traded, and retail investors are coming into this market all over the world and trading markets like a behavioral way that is often leads to fast moves up and fast moves down. So we're really trying to think about this more strategically, thinking about it less as a trader, more as a long-term fundamental investor, and finding those companies that have the best earnings growth around the world.
What about the Fed, Matt? Where are they in this story? How many cuts in 2026? What's your base case?
Yeah, so we're looking more like 3 to 4, but frankly, the biggest risk is one that's developing today. So commodities have been in check. Oil prices have been falling. Gas prices are at the lowest level since 2021. But if oil prices do start to rise and broader commodities start to rise, that's the biggest risk to the Fed because that could drive inflation back up and it could make the Fed cut less. But here's the other things that the Fed have going for them. Wage growth is slowing. Wage growth in 2022, when the Fed had to raise rates a lot, was growing at 6% per year. Now it's like 3% per year. Housing is also slowing. Housing prices are up 1.3% year over year. Back in 2022, they were CAGRing nearly 20% per year. So we don't have those structural inflation drivers we did back in 2022 when the Fed had to raise rates a lot. In fact, they're on the other side of that. So we think that's going to be a reason for the Fed to be able to cut more than the market thinks. But it's risks like today where commodities start to get a bid that suggests the bond market might not be as happy with this kind of move as the Fed would like to have happen.
And I'll end here. Besides that risk, you talk about these macro risk perspective. You talk about canaries in the coal mine is how you put it, Matt. What are those canaries you're telling clients to watch out for?
Yeah, so initial jobless claims comes out every Thursday morning. So the jobs market has been weakening. There's no doubt about it. Over the course of the year, we've lost over 1 million jobs. Whether it's layoff announcements, whether it's the non-farm payroll reports in October, it was a negative 100,000. We've never had negative jobs reports like this without having a recession. But at the end of the day, initial jobs claims are low. That is one of our canaries. It's still singing. It's saying the jobs market hasn't broken yet. And then high yield spreads is a liquidity gauge for us. It's basically a junk bond versus a treasury bond. How much yield is there? If it's tight, that means that markets are willing to lend to companies. It's still super tight. We're at 2.6%. So both our canaries in the coal mine are singing, and we're out there mining returns the best we can. We're just trying to find some nice quality returns in quality companies all over the world.
Matt, great to see you as always. Thanks for your time.
Thank you, Josh.
All right, now time for some of today's trending tickers. We're going to start off here on Novo Nordisk. Those shares moving higher after launching the first ever GLP-1 pill for obesity in the U.S., marking a major shift in the weight loss drug market. The oral version of Wegovy is rolling out nationwide at more than 70,000 pharmacies, with cash prices starting at $149 a month. That's below the list price of injectable GLP-1s. Taking a look over at Bitcoin as well, prices climbing back here above 94,000, signaling what some analysts see as a renewed bullish turn to start 2026. Crypto research firm 10X says trading volumes are normalizing and institutional positioning is beginning to rebuild after a rough end to 2025. And finally, let's take a look over at Qualcomm too. Those shares gaining in today's trade. The company unveiling new hardware at CES as it pushes deeper into the PC and AI markets. Qualcomm also announcing a humanoid robotics initiative and projecting that market could reach $1 trillion by 2040. We're going to have more CES coverage later in the show, including NVIDIA CEO Jensen Huang's presentation on AI. Stay tuned for that and a whole lot more on Market Domination. CES, the big annual tech expo, formerly known as the Consumer Electronics Show, is kicking off in Las Vegas. The most innovative tech visionaries debuting their newest products and concept gadgets. Plus, we're going to hear from the likes of NVIDIA's Jensen Huang and AMD's Lisa Su. Joining us now live from CES, we've got Zach Cass, former OpenAI go-to-market executive and author of the upcoming book, The Next Renaissance. And Zach, maybe start there. Listen, you're at CES, but one big tech theme you're excited about, natural language operating system. It sounds wonky, Zach. Maybe start there, break it down for us, explain that tech simply, and why you're excited about that, Zach.
Well, first, thanks for having me. The theory of natural language operating system basically proposes that there's something after autonomous agents, that at some point in the not too distant future, there's a relationship between hardware and software that allows the machines to feel far more invisible. And the natural language operating system is sort of this melding of ideas of ubiquitous compute and interfaces that don't require learning. And critically, what makes technology today sort of barbaric in some respect is that it is both demands our attention, right? We consume technology and it consumes us in the process, and it requires a ton of learning. Most technologies, most good transformative technologies require a lot of updating. And the future, I think, is one in which the technologies actually work passively, in large part because they work the way we work with each other, and we don't have to be trained on them.
And there at CES, Zach, do you expect to see some examples this year of what you're talking about?
Well, we're already seeing it. So, my take doesn't actually seem that hot against the backdrop of everything that all of the companies are sprinting at right now, which is not just embedding AI in it. That of course is like the big story, but it's a little bit further than that, which is making the technology more invisible. And you're actually seeing it across all hardware. So every device's attempt right now is to make itself feel more natural. All TVs are getting thinner, batteries are getting smaller and lighter, and good consumer hardware that we carry is basically meant to now be less demanding, right? Everyone is billing their consumer hardware device not as the screen that you want to be staring at, but as the thing that is working on your behalf when you're not thinking about it. And that trend, I think we're going to look back on this CES as sort of the marker of this idea of invisible technology or passive compute or ubiquitous compute, where everyone now wants to build hardware that doesn't require this constant attention from the user that we all recognize at this point is making our lives worse.
So ubiquitous AI, Zach, sort of screenless tech. Do you see it mostly at first? Is it for the consumer? Is it for Zach and Josh? Would it be mostly for the enterprise, or some combination of both?
I'm a late hardware adopter, so it might be for Josh. It will come later for Zach. I have older generations of most devices, but I think we are going to see it first and foremost for the consumer for two reasons. One, consumers are globally, generally speaking, consumers are faster to adopt than enterprises, but also because the idea of the device harming us really impacts us on a more personal basis. And we can sort of bifurcate the idea that work is hard and it should be hard. And therefore, when I'm staring at my screen for my job, at least I get paid, versus, gosh, I really wish my kid didn't have to stare at the screen in order to do that thing. Or I really wish I didn't have to stare at the screen in order to make that reservation or book that trip. And so I think ubiquitous, what we're calling ubiquitous computing, ambient computing, and the path to natural language operating system, I think is going to first go through the consumer. And the trends here are pretty clear. I mean, even now, Gen Z is sort of saying, hey, screen addiction is making us unhappy and we'd like to use it less. And we're going to see, I think, companies respond really quickly and say, hey, we can help you with that. We can build a system that sort of works for you in the background such that the time on the device can be much higher leverage.
What are the possible constraints, Zach, the bottlenecks that could hold this up? Is it battery efficiency? Is it infrastructure? What do you see?
There are a few. You've named two really good ones. I mean, batteries have to be way better than just one day and a charge, right? The major limiter to why people don't wear a watch that is electric is because you have to keep plugging it back in. And so you want this stuff to start being truly working in the background, which means the batteries have to last longer. The other thing is replaceability. The problem with consumer hardware that's really expensive is when you lose it, you're like, oh, now I got to go spend another $1,000. And so you actually want hardware that becomes less expensive so that the switching costs can be lower. Then you've got other stuff, which is like privacy. And I think privacy is one of these big ones that, quite honestly, I don't actually, the complications of it are so great that even talking about it here doesn't pay justice. But this is a big question that I'll sort of leave you and other people with is, what is the utility limit to privacy? Meaning, at what point do we say, hey, we have enough, we actually want our privacy back? And real world examples I'll provide is if we all had glasses on, the violent, sexual violence and violence against women would almost certainly plummet. We sort of know this to be true. And then the question is, well, are we comfortable with wandering the earth, staring at each other, knowing that everything we see is recorded? That is a path to the natural language operating system that's going to have to take some very strange twists and turns, which was basically, we've already seen that the pushback early on Snap Glass, people called it creepy and said, could you take that off while we're at dinner? Normalizing technology that operates in the background is going to be one of these societal thresholds that takes a long time to cross. Finally,
you mentioned you worked at OpenAI, Zach. How does Sam Altman's company fit into the big themes we're talking about here?
Well, at this point, I think it's safe to say that OpenAI's ambitions are sort of clear to everyone, and so there's no information that I have that others don't. But what I am pretty excited about is whatever Johnny Ive is cooking, because we know full well that he's quite capable of changing consumer hardware. And I'm particularly interested in figuring out what two of the most ambitious minds in technology will do together between Sam and Johnny. The other truth is that we're seeing a world where surface area for companies just has to keep expanding. It's no longer sufficient to just be a software company. You must also now be a consumer hardware company, and pretty soon maybe even a B2B hardware company. And so, I think we should just expect a lot more hardware from a lot more software manufacturers.
Zach, great to have you on the show today. Thanks for your time.
Thanks again for having me.
We're wrapping up today's Market Domination. Don't go anywhere. We're bringing you NVIDIA CEO Jensen Huang's special presentation at CES Live on the other side of this break.